If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right. Good morning, everybody. Welcome back to another live stream and another week of craziness in the markets. What a crazy weekend it was going into, of course, this week. We have some pretty crazy stuff happening in the Middle East, and oil prices jumped on the open here of this week. Let me see, and it have since then pretty much pulled back here a little bit. It's a very long series of things we need to discuss when it comes to stuff that took place over the weekend, but also what this could mean for markets, how this could impact the dollar, how it could impact the indices, stocks, oil and gold and all these things. We have to get through a lot of stuff, as we have been doing a lot recently. This weekend, I actually had a wedding really quick, and it was an Indian wedding. Well, kind of. It was a wedding in which there was one night that was a more culturally Indian wedding, which was so much fun, and then there was a more standard sort of black tie event wedding the night of. So it was so much fun. But I was a groomsman, and it was so much fun. If you guys didn't see the picture, I posted it all over my socials with my wife and I wearing traditional Indian outfits, and it was a lot of fun. So it was a long weekend, really exhausting, and I really only a lot of fun, but very, very tiring. We were heavily involved. My wife was the matron of honor, so we were very busy this weekend. But good to be back in the office, taking a look at what's happening in markets. Center to everything is the oil price right now. I'm actually going to do something here early on in the stream, because we are kicking off this week a free Edge Finder week. Now, we've done these in the past. It's been a while since we've done it, and we don't do them very often. But I wanted to tell you guys about this early on, because we are going to have a flood of people who are going to want to request access to this. And so this is going to be first come, first serve. But real quick, what we'll do here is I'm going to run this link I'm going to try and paste this out so we can share the link over time. If you would like to get access to the Edge Finder free week event, Chandler, I put it in our YouTube chat. If you could grab that for me and drop it here for us. Here it is. Thank you very much, Chandler. He's on the button today. Look at that. It's free for the week. Now, when I say that, what I mean by that is from now until next Monday, the Edge Finder is free to use publicly. Now, all you have to do is use that form that just got dropped right there to apply for access to the Edge Finder free week event. Now, there's 224 people here. It is a first come, first serve kind of thing, because there is a bit of a process on our end. And sometimes when too many people flood the request at the same time, it does, cause our system to flag some issues. So if you're interested in trying the Edge Finder, here is your chance to do so for that. So there you go. It is free for 1 week. What we do here is during the free week events, we love to get feedback from you guys. We love people to try out the tool to see if it's right for them. But obviously, we use the Edge Finder all the time in the videos. People are always asking for, a way to try it out. And the best way we know how to do this is very periodically, like every, 6 months or so, we'll do something like this, where we do a free event where for a full week, you can try out the tool just to see if it's something that works well with your style of trading. This gives the public a chance to try this out. It gives us the chance to get a lot of feedback from the public, and we love doing them. So Edge Finder is free for the week. Like I said, use this link to make sure that you lock in your spot to the Edge Finder free event. Let me just Make sure that that is operating okay on my end. These are always like, I always kind of have to like fingers crossed, hold my breath on these sort of things, because when we launch like public access to something, a flood of emails come in and a flood of things come. So I just want to make sure that this is operating smoothly here. But that should be, like I said, ready to go for you guys to get access within seconds. Like, it's not, you'll get an email right away once you hit that free. Once you submit that application, it should get sent right to your email for access to the tool. Let me just make sure this is working. Okay, hold on 1 second. Okay. Okay. Yep. Should be going. Sorry, I just had to double check. Looks like we are all set. People are getting their access. Good deal. Thank you guys for the patience. If you already have the Edge Finder, then you know how awesome it is. Everybody's going to want to try it this week. So we're going to have a flood of customer support tickets coming in, but that's okay. We are excited to do it. And I always have to mentally prep for these weeks because it's kind of like a marathon week for us, because we get so many people asking questions and like, hey, I want to try it on this email, and can I, and how does this function work? And so anyways, thanks for your patience. If you're trying it out this week, good luck. Have fun with it. Excited to have your interest in our tools and stuff like that. So let's talk a little bit about the oil price. So oil price jumped here over the weekend. We had a gap up in the price of oil, of course, in response to the U.S. Taking that next step and actually making some strikes on nuclear facilities in Iran. And of course, this takes things to a different level, because it went from being purely Iran versus Israel backed by the US to actually having US involvement. Now, the question is, while this is definitely upping the aggression levels, how does Iran respond? And that is the big question when it comes to the price of oil, is if they respond, if they sort of say, essentially, if they back down, if they refuse to kind of further escalate things, the price of oil can still drop, which can be confusing because people are like, oh my gosh, it's bad out there. But remember, oil prices are moving higher on the expectation that things are going to get more dramatic, right? So if they don't get more dramatic, if Iran says, okay, we're not going to close the Strait of, how do I say that? Hormuz, the oil supply could get really tight out there, and that could cause oil prices to skyrocket. That's the big concern, right? That's the macro market perspective concern that could cause inflation and all sorts of supply chain issues. So that's the question there. I think that's really ultimately the thing that would move the markets the most, would be them closing the strait and limiting the supply of global oil, as Iran is a major contributor to the global supply of oil. Mark, thank you very much for becoming a channel member. Awesome. Thank you so much for the support. I really appreciate that. If you have any questions, channel members, your questions will pop up front and center for me during the streams and videos, which is amazing. Just got my access. Awesome. Enjoy it. Enjoy trying out the Edge Finder. And all I ask is that if you try out the Edge Finder this week during our free event, all I ask is that you, even if you don't purchase it, a lot of people tend to purchase it after the week ends, which is awesome. But even if you don't purchase it, we'd love to just get your feedback. If you want to drop comments on the videos, just letting us know what you like, what you dislike, we really appreciate that. It helps us to continuously improve the tool for our users. So oil prices, like I said, longer term level of resistance getting hit here. And we're still watching to see how price action responds here. My opinion on this, and I could be dead wrong, is I think most likely we are actually going to see a trend towards de-escalation rather than further escalation. And this is kind of contrarian, because most people, and I'm saying this because I have the put to call ratio stats, the crowd sentiment seems to think that things are going to get worse, right? People kind of seem to think that the next step here is further escalation in terms of uh, Iran's response. Put to call ratio to me still shows you that you have a huge amount of call demand, right? So people buying calls on oil thinking it's going to skyrocket from here. And so when we see oil prices ripping higher here and the put to call ratio is showing a huge demand for calls on oil, to me that makes me a little bit like, okay, the market has very big expectations that something further is going to escalate. And so we did see the gap up here and then the fade. Why do we see the fade? Well, the fade might be coming in because, again, people might say Iran's response is going to be more on the timid side than on the aggressive side, right? So if you get aggression in terms of a response, if they escalate things with their attacks on on Israel, and Israel, reciprocates with more attacks on Iran. If that continues to escalate, oil prices go up, right? But my expectation, actually, my educated guess, and it is a guess at best because nobody knows. But my guess would be the response would probably be, I think about it this way: Iran may not want the smoke, right, from the U.S. Clearly, if the U.S. wants to get more involved, my response, or Iran's response, in my opinion, would be they'd rather sort of back down to the U.S. than get hurt by the U.S. and have to back down to Israel. Does that make sense? Again, I am not, I'm trying to remain as just market objective as I can on this very sensitive topic. And that is my goal, as always, with this channel, is to talk about how these things move markets. So I think the market's expectation is, okay, Iran's going to back down to the US so they don't have to back down to Israel. So that could cause, now, however, at any moment, if they close the strait, oil prices rip higher because the supply of oil is a very, very sensitive one, and or it's a very sensitive to geopolitical stuff. So if you get escalation or you get a closing of the strait, then suddenly you have oil prices ripping into the 80s, I think, and possibly even threatening 90. And so that is a serious concern, because I think if you break into the high 80s, it's going to dramatically get the attention of the stock market. Now, in terms of the stock market's response, amazingly, it is flat on the day. So we are not seeing a big drop off in stocks. And I think that, like I said, in my personal opinion, I think the market is sensing that the next move from Iran is more likely to be of de-escalation than it is to be escalation, right? As crazy as that may sound, that's what the market seems to be suggesting. So we'll see if that's right. Now, it's not always correct. The market will have to reconsider if something changes from here. Anyways, the NASDAQ is pulling back just slightly in the last few days, but really not much at all. It's sort of just consolidating at support here around the 21,675 level, or just this general area that we're sitting at now. My personal view, I'm still long the Russell. I've got a trade here that has been pretty choppy in the last few days, but I will stop out of this one. I'll take profits on this move if we do get a break of structure here. So if we break lower, I'm going to take profits on this trade. Obviously, I would be giving back some of my gains, but that's fine. I mean, we've had obviously some geopolitical headlines that complicate things here. And if any resolution comes out of it, I do think that the Russell will rip higher. So we'll see. We will see. We will definitely see. But yeah, I mean, again, I think centric this week is definitely going to be oil prices. The strikes that were made by the U.S. How does Iran respond? That is really going to be a driver, I think, in the short term to markets. And we'll see. I mean, gold prices are flat here. I think what this is telling you is that the market thinks, and I have no idea what the next response from Iran is going to be. That's definitely not my expertise, or I wouldn't claim to think that. However, the market seems to be suggesting that they don't see massive further escalation, at least at this time. Because if they did, if the market said, oh, shoot, it's about to get real over there, gold prices would already be at all-time highs. So if you think that there is going to be further escalation, perhaps you're playing for that. But personally, I don't trade based. I really leave geopolitics as much as I can to the side in terms of trying to call what markets are going to do because of their very volatile and unpredictable nature. Right. So like when it comes to looking at what's happening in the Middle East right now, I don't claim to have some sort of big knowledgeable edge on what I think is going to happen next. I have an opinion. I think Iran likely will de-escalate rather than further escalate because they see what's in front of them right now. That's my opinion, but I don't make a big, guess or a big bet on markets based on that, right? So what I actually do is I look at what the market itself is telling me. The market itself is telling me it does not see a massive escalation. That can change. So people are saying, well, just wait and see. Well, okay, if it does, then the market will rip for gold, right? And the stock market would drop in that regard. But right now, the market's not suggesting that, and the market's usually pretty smart. So we'll see. We'll see. And let's again from a humanitarian standpoint, as we always say on this channel, let's hope for peaceful resolutions as much as possible. Stocks, amazingly, are still within reach of all-time highs. We were talking about a 2.5% move higher here would get us back to an all-time high in the NASDAQ. The Russell's still a good ways away. The Dow Jones, also a good ways away, actually, 6-7% away from all-time highs. VIX is just modestly higher, which is pretty amazing considering, what happened this weekend. I would have guessed that oil prices would be higher than where they are, but clearly there's people who are like they've got their finger on the pulse of what's going to come next. And if there was significant damage done, perhaps the idea is, okay, if damage was done, very likely the next move from Iran would be, okay, let's back down. Because if damage was done, and I've seen all sorts of reports. I don't know if you guys have seen this. I saw somebody doing like a radiation in the area check. Like if you did damage to a nuclear facility, there should be nuclear radiation in the area. I saw somebody talking about that on X.com earlier. So I don't know. But yeah. Dollar index is also up on this a little bit. You do see prices bouncing back from the lows here around that 97.6 level, bouncing back. I actually looked to fade this morning a little bit. I did actually get a short position on the dollar established through. Now I need to adjust my levels here a little bit. I did get a short position established on the dollar index through a trade that I shared in our VIP room this morning. So I am short the dollar through a currency cross, and we do see prices coming up to a level of resistance here on the dollar. This is my first attempt. If we do get a bigger push higher on the dollar index, as long as the economic data still looks sort of soft for the US, this would also be an area where I'd probably look to try and get short the dollar in favor of another currency. So I did take a trade on that inside of the VIP room this morning. We should have a Nick FX channel. Freeman David, that's what you're watching. On this channel, I talk currencies, commodities, indices. So pretty much macro markets on this channel. And then on my second channel, I do individual stocks. Anyways, like I said, dollar index moving higher here a little bit. We have most currencies. I noticed too, like look at the Australian dollar and the Kiwi dollar this morning really sold off. I actually closed a trade on the Australian dollar against the Canadian dollar this morning. I had a trade. I think I took it. It was either Thursday evening or Friday. I think it was Friday, actually. I took a trade on Friday going short the Australian dollar against the CAD. Really simple setup. I liked the trade. I went short the Aussie CAD. So what was this, 620? So that was, Friday. So I went short on Friday and ended up taking a profit here this morning because this thing completely, sold off here and ended up taking profits on that one. So I'm out of the Australian dollar CAD position, AUD/CAD. Went short, took profits on it this morning, and then I actually sent out a signal this morning that I'm buying the euro dollar, and we'll update everybody on what I do next with this inside of the group. I do have some plans to manage the position, So if that's something that you're interested in following along with, if you're a Forex trader or you like gold or indices, I trade all of these things pretty heavily inside of the group. So if you're not a member of the VIP group, this is a fair warning here. The VIP sale is ending this week. VIP is currently 45% off during the remainder of this week. So if you'd like to get access to the VIP group, it's a one-time payment to join, and it is currently our biggest discount of the year at 45% off. We'll drop a link here in the chat to where you can send a direct message if you're interested in getting access at that 45% off discount sale. So if you want to get signals from myself and the rest of my team here, make sure to take advantage of that 45% off discount before that ends. Like I said, it is the biggest discount that we do all year long on VIP memberships. So I went short the Australian dollar versus the Canadian dollar. Basically just traded this quickly range to range. Took a short here, closed out. And it was about a 70 pip move, 70, 75 pip move, which, I'll take that pretty quick. And if it bounces back and I can get more short setups, then I will definitely look to do so as long as the fundamentals look good. So if I take a quick look here at let's see, where are we at? Eco surprise meter. This was part of the reason for that interest was that the Australian dollar is getting a weak reading here, and the Canadian dollar is getting a pretty strong reading. Now, all this is telling us, guys, and I do have a video in the editor's queue, so they're working on this video here. The economic surprise meter, all it does is it takes a look at our list of imported economic data for each currency, and it says what percentage of those readings are beating expectations, like CPI, jobs reports numbers, GDP growth, PMI statistics, all of these important macroeconomic data points. Our software will take a look at those things, and it will essentially check and say, hey, you know what? How many of those things are outperforming versus underperforming? So right now, Australia, and this has been a really interesting new development, Australia recently has had a significant underperformance rate with a lot of their statistics. Meanwhile, Canada and, for example, for that matter, New Zealand and Europe have all had stronger than expected readings in recent weeks. So we'll see. That is the thought process here with the Australian dollar and the Canadian dollar. So I went short Aussie CAD and then took profits on that this morning here within the VIP room. So we'll see if we can get another trade on that. And I'm watching it close now. By the way, I mentioned this earlier. Let me just remind everybody. So we're kicking off something here. If you have not already gotten access to it, we just started offering our Edge Finder free event this week. So if you're just tuning into the stream, I mentioned this earlier, but we are currently doing 1 week free access to the Edge Finder between now and next Monday. So if that is something that you're interested in learning more about, we have a quick application for you to fill out here that we've just dropped in the chat. If you'd like to try out the Edge Finder during this week, please use this form, fill out that form, and it will send access to your email. It is a free weekly trial or 1 week trial. Now, please note, it ends January 30th June 30th for everyone. So every time we do this, we have people who get upset with us because they're like, you said 1 week free, but it's not 1 week from your starting point. It's 1 week starting today. So today until next Monday, the Edge Finder is free to use if you fill out this form. But at the 30th, it closes down for everybody. So if you've been thinking about like trying out the Edge Finder, you're like, I'd love to see if that's right for me. This is your chance to do that completely for free. Usually our trials cost something, but this week only we're doing it free to access. Steve, all you have to do if you want some information is just message us. So if you are talking about the VIP membership offer that we're doing right now, just send us a message and we'll give you some options. The reason I say 45% off and not prices is because we offer different types of memberships. So if you want a 1 month or a 1 year or a lifetime, it's easier for me to just say it's 45% off. send us a message for more details. So yes, if you have questions about the VIP group, just message us on our website and we'll get you set up with the best offer we can. Nick, the COT data has not yet updated. Yes, we get this question very frequently. Whenever there is a federal holiday, what happens is they delay the reported COT data until the right here. COT data delays may occur on and around bank holidays. Click here for the COT schedule. So we've got that right there. So yes, it comes out each week. It has not yet updated for this week due to the holiday. Make sure that you've submitted your correct email. If you haven't, feel free to message us on our website, a1trading.com. All right, let's keep going. Let's take a look at some more moves here. So gold did not really make a big move in response to what happened this week. And now oil's actually down on the day, which is pretty incredible considering everybody freaked out over the weekend. And this is just something I've seen so many times in markets. When everybody expects, okay, here we go, World War III, let's hope doesn't ever actually happen. But a lot of people are like, it's going to happen, right? At the wedding I was at, people were talking about this. They're like, we're going into, you know what? And I was like, the back of my head, the contrarian was like, I don't know about that. Because again, first of all, this event, there's no winners. In fact, none of us are left, right? There's no point in that. But also, I think that I don't have a huge opinion or edge, and I don't claim to have an edge on knowing what's going to happen next in the Middle East. I think that would be pretty foolish of me to make like a huge stance on, I think Iran is going to do this, right? But oil prices are on the rise. And what I'm more interested in is if we get significant breakouts, what does that do to markets? And the big one that I see is, again, it can cause inflation. And specifically what could get that break higher, as I discussed earlier in the stream, would be them closing the Strait of, I cannot say this word. Is it Hormuz or Hormuz? Anyways, a place where a lot of oil comes from, Iran. If the supply of that oil to the global marketplace is sort of shut off, it can cause oil prices to rise very, very quickly. Supply and demand like 101, right? If you have a diminishing supply, then the demand for existing supply would skyrocket, causing the price of oil to go up. But that's what everybody's kind of already thinking is a possibility through all this. But if there's any de-escalation, the price of oil could come down. So I can't tell you where I think this thing is going to dramatically go next. However, I do like the idea of getting long oil if you get pullbacks, right? So I think that the demand side of oil, which is the more boring story here, economic data holding up decently well. I do think that could be a buying opportunity, but I'm definitely not interested in going long, chasing it up here and making the big call. Because I think if you're making a big bet on oil right now, you're betting that there's going to be major escalation in the next like 24 hours. And I just don't know that I have the ability to make that call. And I don't know, right? And it's okay when you're trading, you have to acknowledge the things that you do not know. And I think a lot of people, what they'll do is they'll see these headlines and they'll say, oh yeah, no, we're going into, and they'll make this big call when they don't have any idea better than the guy next to them, whether or not that's going to happen. So you have to be really careful. So yeah. I'm also long silver. I do have a small position long silver right now. This didn't really get too much of a move in response to this either, but we are slightly in profit in that trade. Bitcoin dropped over the weekend, but bounced back pretty nicely. Yields are lower today. People buying bonds, it seems like. Stock market just opened up. Let me just take a look at some stock moves here. Let's see. Like you have some stocks that are up really nicely today. Here's Estee Lauder. Tesla's up 4% almost. Holy crap, that's awesome. Tesla's a good size position for me. PayPal is also up. ExxonMobil is up. No surprise there, right? ExxonMobil up a little bit. Palantir's up, McDonald's is flat, and then some of the bigger losers here would be Carnival Cruise Line, Lululemon, Delta Airlines, Google, Amazon, Coinbase. Cool. Yeah, like I said, given the headlines this weekend, I thought we would get a much bigger move. But like I said, by the time kind of the markets are figuring out like, okay, what are the chances of a big response from Iran? That's where we're seeing the markets move the way they are. Stocks are barely lower than where they were on Friday. So that kind of gives you a sentiment check on what people think is going to happen next. Here's the euro dollar trade that I took. So I went long on euro dollar here this morning. The idea being, I think we're going to continue to see the euro look strong against the dollar. It is a top setup on the Edge Finder too. I have a plan to do some more videos on the Edge Finder this week, especially with the free week event. I know there's a lot of people who love like exploring the Edge Finder and they want to watch some videos with it. We have tons of videos available, but I want to add some new ones. One of the videos that I want to do is fully explaining how to use the top setups indicator within the Edge Finder. How do you actually trade with this? And I will have that video out this week. I've already filmed it, and it is being worked on. I think we have it coming soon. So if we take a look at euro dollar, this is a very bullish setup on the Edge Finder that I like. Also gold, and I already am in longs on silver. NASDAQ's also getting a very bullish reading. And again, this can be confusing because a lot of times people are like, Nick, how could you possibly be bullish on indices when we have such, chaotic things happening in the world? But again, the way I see this is my stance on this with the indices is this. You can get all sort of riled up about what's happening in the Middle East, but I don't think it really impacts the stock market dramatically unless you get massive escalation causing the price of oil to skyrocket. If you have inflationary pressures, that would get the market to freak out. But if you're wondering why isn't the market coming down, it's because what's happening there right now doesn't directly impact the profits of companies like Microsoft. And these companies are doing phenomenal, right? We saw this in the latest earnings report. US companies had really good earnings reports compared to what was expected in the recent quarters. We've had actually, despite all the craziness, all the worries about the uncertainties about tariffs and what's happening in the Middle East and all these things, the AI trade is still powering a lot of these companies higher. Major companies like Meta and Amazon and Google and all these high-end huge businesses, they are funneling money into the AI trade. They see many of them are already employing AI to generate profits. They are seeing. I've seen even recently. This is kind of a crazy one, but like companies like Google, for example, are discussing, and this is kind of a scary topic for some, the idea of not hiring as many junior software engineers because of the power of AI, essentially replacing a lot of the entry-level software jobs. And that's a little bit scary for some people, but specifically to Google, right? That's a very positive savings on their income, right? At the end of the day, I know it's kind of a dire subject, like, oh my gosh, people are not going to get hired. It's very positive for Google, right? I'm not saying whether that's good or bad. I'm just saying these companies, despite the scary headlines and the news, if you're staring at news articles all day long, you can forget that these companies are living in an era where they're going to be super efficient and they're going to continuously profiteer off of what's happening with the AI trade. And, I'm also, I've said this a lot, but I'm not somebody who thinks that AI is going to replace everyone's job and we're all going to be, just getting government subsidiaries to live off of. I actually don't think that is likely. I'll say this really quick. This is my thought process on this, right? Here's us now, right? A lot of people who are afraid of AI replacing their jobs are looking backwards. They're not looking forwards. I'll give you this quick example. People said the same thing about the internet and automations in general there's been this debate for decades of people saying this new technology is going to replace us all, right? Well, you're looking backwards. If you think about this, you're talking about replacing the job market of today rather than considering what the job market of tomorrow will look like. Guess what? New industries will come out of AI. Entire new, massive projects that demand tons of people's involvement will come out of this, in my personal view. And so you're looking at the jobs market of today and saying those are all going to get automated. And even if all of those get automated, like 90% of current jobs get automated, guess what? I think there's going to be a huge surge in new creative work that human beings can do. And so I think, if you've been on the side of thinking that AI is going to replace us all, well, I would just suggest too that people have been saying about the latest technology for decades and decades and decades. And there's still a lot of creative work that people can do. So anyways, that's my thought on that. But yes, it might replace certain jobs, and especially repeatable jobs that are not, very high level education jobs. There's more worries there, and I get that. There's, especially if you're like cashiers or things like that, then yeah, that could be kind of scary. But anyways, these companies are standing, really strong right now with all of the stuff that's occurring in the AI world is very exciting, and there's huge efficiency that's coming. So that's why I think the stock market can continue to power higher. I think that people are, believe it or not, underestimating the amount of efficiency that AI will bring to great companies of today. Anyways, so like I said, going through my checklist here of items that I'm looking to trade today: euro dollar, I'm already long. Silver, I'm already long. NASDAQ, I'm not long, but would like to be if we get pullbacks. I'm already long. US oil, I'm also long, bullish on, but do not have any current positions. If we can get pullbacks in the price of oil, that may be a setup for me. Let's see what else. I'm still looking for some short positions on the Australian dollar. The Aussie CAD was a really nice trade for me. I closed out for profits in the VIP room this morning. Actually, let me just pull up some Australian dollar trades really quick. Aussie Swiss. Most of these have already made their move, I'm going to guess. Yeah, like I took profits at this level here this morning. Aussie dollar is also kind of sitting at support. I mean, if you get this kind of move today, maybe not today, but in the coming days, that might be a setup for me. So I'll watch that one. I went long euro dollar here this morning. So let's see how this one works out. Here's a 15-minute chart on euro dollar. Oh, what about that DAX trade? Yes, you're right. I'm also long the DAX. I've got a lot of trades on right now. A lot of trades on right now. The DAX trade looked like it definitely threatened my stop loss. Didn't quite hit it and has bounced back a little bit. If this thing rolls over further, I'm just going to take a loss on it. It is a small trade for me. I'm not worried at all on that. If it stops out, it stops out. If we can get a bigger rally going, then I'm going to look to manage the trade, trail stops, etc. DAX is still getting a bullish rating on the Edge Finder as well. 10-year treasuries are getting a bullish rating, which I think is interesting. Let me just do this really quick. If I go trend, TLT is looking interesting here. TLT's been like just super, super range bound the last few years. If you've been somebody who's like big into bonds in the last few years, it's been a rough ride. Guys, you got to think, like, a lot of people who bought bonds in 2020, I mean, you're still sitting at a 42% drawdown on the TLT. This is something that, did amazing for many, many years, or did really well. It did its job in terms of, bonds pay you interest rate, or they pay you coupons. So by holding bonds, you can kind of collect that pseudo passive income for lending your money to the government or to a municipality or to a company, you can do bonds for all sorts of things, right? But bonds have actually done really poorly in recent times. And if you're wondering why, well, look no further than what has happened in the interest rates world, right? So here's a weekly chart of the 10-year government bond yield. So yields have been falling for the last 2 decades. We lived in an environment with very, very cheap money to borrow, very low interest rates. And just recently, we've had the big jump in yields. And so interest rates, are they at a high level historically? No. But are they high relative to recent history? Think since 2010? Yes. Right. And so yields are up to 4.34%. Indicative of kind of what has gone on with the Federal Reserve, where we've seen the Fed hike interest rates, and that's why this chart has moved up, right? And now, this is the crazy thing. We've been talking about, rate cuts are coming, but the bond market, right, is still sort of consolidating. We're not seeing yields dramatically move lower, which would suggest the Fed's going to cut rates a bunch. But personally, this is my opinion, I personally think that yields are going to come down, maybe not crash down, but I think that they're going to trend lower. And I do expect that the Federal Reserve is going to cut interest rates this year based on the current sort of macro situation. So if you're somebody who struggles with the macro, what I would suggest you to look into, like, stop everything, especially with the free week that we're doing right now. The Edge Finder is free to use this week, by the way, public service announcement. Let me just make sure that's still working out correctly here. We should be getting, yes, we've got plenty of people getting their access. I'm just checking our system to make sure people are getting that. We'll click a link here, or we'll drop a link here in the chat if you want to try out the Edge Finder. It is free this week. I know I keep saying it, but I want to make sure people who have not heard about it yet are tuning in. I would encourage you, if you struggle with understanding the macro drop that we're looking in, or the macro backdrop that we're living in, take a look at the US economic heat map. And what this will do is it will show you the US dollar or stock market impact to each of these major economic news factors based on the forecasted value by the economist or analyst community, right? What they suggest or think is going to come out versus what actually comes out, right? So this differential is where we generate, this impact score from. We look at the difference. We look at what we call the surprise, and we look at the surprise factor between the actual and the forecast. And we say this is the impact overall. So it's pretty high level stuff. I mean, it's looking at all of these macro data points, and then we're generating, again, a bullish or bearish impact to all of it. Nick, how do you get previous month's data in Edge Finder? If you want to look at historical scores for the Edge Finder, head over to Edge Finder Score History. I know a lot of people love looking at this one. It's a fun one. Pull up like gold, for example, and you can see when gold got bullish or when it got bearish, etc. You can go back and look at historical scores. I know a lot of people want to back test some stuff this week, so definitely do that. I think we just had some data point come out, so let me just PMIs, I believe, this morning. Let's see what those came out to be. Some good numbers. 52 for manufacturing PMI, better than expected, and also good for services PMI, better than expected. And they revised the previous number higher. Let's pull up stocks, and boom, you had a little bit of a positive response here to that data point. Let's see what else. Yeah, look at this. NASDAQ just pulled a 180 here. Also, something must have been said. We had the so we had PMIs come out for Europe, slightly soft. We had German numbers come in pretty good. Sorry, this was French. French numbers came in a little bit soft. German numbers came in a little solid. Overall, manufacturing for Europe came in soft here, just very slightly. And services PMIs came in as expected, and they revised previous numbers up. So also taking a look at UK's numbers really quick. Sorry, I'm running through all this economic data. PMIs for the UK came in better than expected, very nice, and also better than expected on services. So UK had a pretty nice day there. in terms of their PMI data points. And let's take a look at our US numbers again. PMI for both services and manufacturing came in better than expected. Take a look at the euro dollar continuing to push higher here this morning. This is solid. I went long this morning, as I mentioned, inside of the VIP room. We took a signal, or I shared a signal in there this morning. Dollar index slightly lower from its highs, but really not making too much of a move. Seems like stock market also bouncing on this as well. A little bit of upbeat economic data. People saying some Trump said something this morning. Can somebody do me a favor and just copy and paste what was said into the live stream chat? That would be awesome. Oil prices, I can tell you, are moving lower here right now. Let's see what happens with that. Gold and silver bouncing. It's good for the silver trade. Silver's up almost 0.5% this morning. Okay, so let's see what else. Even the Australian dollar bouncing a little bit. I'm feeling good. I took that profit when I did on Aussie CAD. Actually, Aussie CAD hasn't moved too much. All right, here's the quote. Everyone keep oil prices down. I'm watching. You're playing right into the hands of the enemy. Don't do it. Interesting. Oil prices are actually moving down. So maybe Trump hit the sell button on oil prices. But it is, you know, actually what that does, guys, is it tells us we already knew this, right? We know the objective of the Trump administration because this is what he campaigned off of. The idea of getting, if you want to get national debt down, which is a valiant effort for anyone to attempt because politicians are straight up incentivized to never get the national debt down. It is one of my biggest gripes with the way the government of the United States works. Is to get votes, you have to spend money. And when you're in office, you're expected to spend a ton of money because it benefits all your sponsors. It's unfortunate because I don't think you can really, this is my opinion, you can't. Oh, actually, I mean, I don't know if anybody, as an example, who hasn't done this, anybody who has a huge position of power, in order to do that, has to appease their, you know, their sponsors, their crowd that funds their operation. And so in order to, anyways, that's a whole nother conversation. The point that I want to get to with this is that we know that the Trump administration is big on the idea of getting a weaker dollar and getting yields to move lower, essentially getting the Federal Reserve to cut interest rates to assist in the national debt coming down, which I think is an objective that anyone would want to work towards, because again, if you can get yields to come down, even the Federal Reserve themselves wants to cut rates. It's just a measurement of like, you know, I also want to eat Twinkies and also lose weight and get fit as anything, but you got to do the right things in order to actually make that happen. So, you know, the thing here with yields, if we're going to get yields to come down, how do you get yields to come down? Well, you get yields to come down by killing the inflation, right? The inflation is doing really well. And that is not a Trump or Biden victory. I would say it's kind of the Federal Reserve doing a decent job. We've seen inflation cooling down in recent years, right? We've had recently 4 wins in a row for inflation, where inflation has come in lower than analyst expectations. I mean, we're doing well on the inflation department. We're close to our target of 2%. And so we are, to the credit of the Fed, doing okay with inflation, and we're getting close. But where we're also seeing some struggle is the economic data, like retail sales numbers, PMIs. We've seen some softness in that side of things. So that is a dynamic in which I think it's appropriate that we start cutting interest rates soon. But a rise in the price of oil, the reason this is such a problem for the story of getting interest rates down and inflation under control is that if we get a big breakout in the price of oil, that seriously challenges the inflation narrative. If oil prices shoot up, the price of everything else shoots up. It's pretty straight up. We got Ivan joining here in just a second. I know you're here, Ivan. I just had to finish that thought. We're going to hear from him on what's going on in just a second. We'll bring him into the call. Before we do this quick break, let's just remind everybody we are doing an Edge Finder free week right now. It is free to use until next Monday for everyone who is watching this stream. If you do not have access to the Edge Finder free week, here is how you can get access. The link is in the chat right now. Use the Edge Finder for a free week using this link. Fill that out quickly. And once you do so, whatever email you put in there will send your access. You'll be within the Edge Finder within 1 minute from now. If you click that link, fill it out, and go from there. But enjoy the free week. All we ask is that you give us some feedback on what you think we can do to improve the tool, and consider purchasing it at the end of the week if you like it. All right, up next, we've got Ivan joining the call. Stay tuned. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, we're back with Ivan. Hey, Ivan, how are you?
I'm doing good.
Good to have you back on the show, and just in time to help us with all this crazy calculus that we're doing with markets right now. Oil prices on the rise, dollar bouncing back a little bit, indices all over the place. What are your thoughts on all this, and what's like the thing you're focused on most in markets right
now? My dollar yen position that I was, what was I? About 440 pips in profit. Now only 50.
Wow. Okay. So you're looking at dollar yen. Guys, could we? Oh, there we go. We got it. So you've got dollar yen. It came back. What happened there?
Well, that's what I'm wondering about, because yen pairs has hit to take profit on the weekly. So that's also what's happened on dollar yen. So maybe it's a profit target that I should take profit now. So I'm stressing a bit, should I take profit? But it's too early now because I'm not supposed to do that. So it's not in my way to trade. But I feel like if I don't do it now, I'm going to lose a lot of money. So yeah.
Yeah. So you're taking profits on it yourself?
No.
Okay.
There's only 2 rules. Either take profit or stop loss. So it can't be emotional trading, can I?
You certainly shouldn't be. But yeah, no, that sounds good on the yen pair. Well, or the dollar yen up 0.7% here today, jumping up. A lot of the yen crosses moved higher this morning. So you're still long dollar yen. Are you watching any of the other yen pairs today as well?
No, as I was watching the euro yen, but that also hit take profit at 169.62 on a Monday morning, which to me, all my rules and my regulations says that's the peak, and then we're going to pull back quite hard. So yeah, the problem that I have is that this war kind of triggers everything into one direction, and then it probably going to take profit, and it just collapses on you. So if you don't take profit at the right time, you will stand there with empty hands.
Yeah, that's fair. So you're looking at these, and by the way, for viewers in the audience, tell us a little bit about these target levels that you have on the chart right now.
So this is a free indicator. Is pivot point. So on the previous period, so you create a high and a low, and the close price, and with that it creates an average, which is this central pivot, and from that it is calculated like one or two times out from the target, from the central point, is a target in either in a bullish or in a bearish direction. And when you start the week, you're like, okay, are we bullish or bearish? You decide that, and then I don't trade above the green box or beginning of the green box, because that is likely where target hits or where price goes and then falls down, like it did last week, like it did a week, like it did the other week, like it did the other week. So it's kind of like a natural place. So more than anything else, it's just future support and resistance that you can do regardless. You don't need this, but it's easier.
Yeah, awesome. Very cool. And yeah, that's available on TradingView. It's a free indicator for everybody in the audience to check out for themselves. Ivan, dollar index. What are your thoughts on this? It's bounced back a little bit here. Last time we spoke, you were leaning a little bit bearish on the dollar. Are you still?
What?
Are you
That's
bullish?
a long time ago.
Yeah, like 2 weeks ago.
Yeah. Okay.
Are you still bearish, or are you now flipped bullish?
No, because I bought dollar pairs like around 13th of June and 9th of June.
Mm-hmm.
So no, it's seasonality. Now, well, I was dollar bullish because of increased inflation expectations and Powell not being bearish, and he wasn't bearish. And the GDP now from Atlanta went up to almost 5%, like kind of like a preliminary thing, and then it went down to 3.8, which is still way above target. So I thought, okay, that could make some dollar bullishness, and then the war happened, and then it kind of accelerated that direction, at least.
Yeah, no, it's interesting just to see the dollar index still chopping around here, despite, we've had all sorts of economic data that has mostly been negative recently for the dollar. But then now you have the force of, as you mentioned, a more hawkish Powell, and the uncertainties around the Middle East are definitely more bullish for the dollar if they continue to escalate than bearish. So it's possible you could get a little bit more upside. I personally lean still a little bit more on the bearish side of the dollar, but we'll see if we can, what happens next in the Middle East. That's going to play a big role in causing the dollar to move higher or lower. Which currency pairs of the dollar crosses do you like right now?
Dollar yen.
Makes sense.
Oh, I'm sorry for breaking your heart there. I still love euro dollar, but euro dollar doesn't do anything. So to me, it's more like, what can I do with you? It's supposed to be bearish, but it's not supposed to be bearish because, okay, this is my law, and whatever, it doesn't really matter. But my law says after the last Fed meeting, we're just going to go into a range. So is that kind of where we are now? Starting the range now. So lack of volatility, lack of trending is kind of what I'm supposed to be. That's generally what has happened. So to me, it's more like, okay, which chicken do I pick? Everyone runs in circles.
Yeah, no, that's the thing, is like when it comes to currencies, and this is the, I recently had a conversation about, as a currency trader, it's sort of the way like stock traders can pick individual stocks, currency traders can pick individual currencies versus each one. So you mentioned liking specifically the dollar yen because of the way, it's been moving with some more decision here recently. So I think that's really, currency traders should really think about that. If you're bullish on something, let's say you're bullish, dollar, you have the choice of what you put it against, and really that plays a big role in what you want to do with it, because you can actually be, let's say you're bullish the dollar, and if you're selling the Kiwi right now, then you played it way better than somebody who sold the pound where it's pretty much flat on the day. So like having that other currency in mind is really important. That's why, when we talk about currencies, we oftentimes, you'll always catch me asking Ivan that same question of, okay, so which currency are you taking that against? Because it matters tremendously to the profitability of a trade. If you're right? If you're on the right side of the bigger move, you're gonna do leaps and bounds better than somebody who might be right, but they picked the wrong counter currency. It can be a tricky part of currency trading. You're trying to pick two at the same time, but if you get it right, that's where you can catch those really nice moves in markets. And those yen pairs, they tend to move a lot. So with the yen pairs, you can be very right or very wrong pretty quickly. Take a look at Swiss yen. Look up 0.9% today.
Yeah, and that one has a very great run. I wasn't a part of that run either. But on the other, like, is this that Bauman came out now and said that tariffs will likely to have small implications on inflation, and that's kind of the current driver of the dollar bullishness, and the reason why we have dollar higher is because that is the main kind of philosophy or theory. So when Bauman now comes out and says, well, that's going to have little impact,
that plays a big role.
Pricing it out.
Yeah, that's actually big that just came out. We can see stocks moving higher, we see dollar moving lower, and we see yields dropping pretty sharply off of that in the last, there it is, the last minute or two here, moving lower. And we've heard this. I mean, this makes two Fed officials here, Bowman and also Waller last week, made some really dovish sounding things. This for me is part of the reason I still am a little bit cautious on the dollar and think that it may continue to move lower, is just because, again, you have the tariff uncertainties, but a lot of the data, the hard data, is falling sort of negatively for the dollar at this time. You have, for example, PMIs came in soft, retail sales came in soft. We barely hit expectations on the NFP report. ADP was a big miss. And inflation has been cooling more so than expected. So to me, I think that the story for dollar bearishness still makes sense. However, the hard part about
that's wrong.
What's that?
Powell said opposite. Powell said that inflation had increased.
Oh, interesting. So like projections for inflation, you mean?
No. If you go back to, I'm sorry. But yeah, last time was 2.3. This time was 2.4, but it was less than expectation. And Powell said that we were higher than we had a higher, inflation ticked higher, or whatever that word was.
Interesting. Yeah, because what I have here is we had previously 2.3, then we forecasted this time around to get 2.5, and it came in better than expected or lower than expected at 2.4. I think that's right. Is that right?
Yeah, but it's higher than last time.
Yes. Okay. Yes, you're right. Yeah. So it did technically move higher, but lower so than expected. Okay, gotcha. Yeah, and so I think like you put that together, but then the challenge with it when we look at the dollar index is, okay, it's sort of been trending lower here, and now we have this uncertainty around tariffs, but we also have the uncertainty around the Middle East. And so either of those two scenarios, well, actually the tariff stuff could cause the dollar to move lower, but the Middle East stuff could cause the dollar to move higher. So there's a whole bunch of just challenge here. So I think your point about maybe getting some choppiness on the dollar here may actually be a fair case right now. We've moved a lot lower, and there's sort of a mixed ground on forward-looking stuff, what could hit it next.
And so we are going into July. We have the summer. I don't know when you guys have summer, but we have summer vacation from about next week. Nobody's going to be at the market other than bots and computers. Not that they were there before, but manual trading. And what generally tends to happen is that they exit their positions going into June or in June, and then whatever happens in summer happens in summer. And I remember 2018 when Trump, that never does in the wars, engaged with a trade war with China. we didn't really move until July or end of July. So there is very few or very little to push until traders comes back. And that's kind of, I don't know if it's my theory, but it's kind of what I have experienced out of July, because I've always been like, oh, it's great summer, out of coming home from uni and going to be trading every day. But then always hits stop losses because there was nothing to drive it. And I always came back to break even. Sorry.
Yeah, no, it's and the summer months can sometimes be really, they can be really slow at times, and they can also be, depending on what's happening, right? If the geopolitical stuff stays really elevated, we could still see all sorts of volatility. But to your point, typically a lot of people, like, there's a little less market activity in terms of the summer months as people take their vacations and things like that. So we'll see what takes place there. I'll say this, Ivan, I'm pretty shocked that I was buying stocks that I liked when the markets were dropping, but I'm pretty shocked at how fast it recovered from those lows. I mean, we are back almost to the all-time highs for the NASDAQ, just a few short weeks after we bottomed out in that, well, not weeks, but a few months here from those April lows. I think that the big thing here now is, notice how we're hardly talking about tariffs at this point, even though they're still a very real and very pressing matter. Now we've kind of moved our focus on to the next, thing to worry about. But it's pretty resilient, I would say, how well this market has held up here despite all the things that we've thrown at it in recent months. Between the tariff, stuff, and the constant Truth Social posts going out that are causing people to, go crazy one way or the other. And then you have what's happening in the Middle East. It's just kind of a nonstop barrage. And I think it's really easy to get lost in that stuff and just stare at headlines all the time. But for me, it looks like, okay, yes, we did tick up in inflation, but I think the more important thing, the more important read is 2.3, 2.4. Put that to the side for a second. 4 times in a row, the analyst community has expected inflation to go higher than it actually did. And we've continued, despite all the worries about tariffs and all this stuff, to see inflation still generally trending towards that 2% target. So to me, I still think that rate cuts this year are likely. It's a better question, I think, is the central bank in the United States, the Fed, going to cut rates at a pace that is, significant in relation to the other currencies? Because at the end of the day, most central banks, like Europe's cutting interest rates. The Bank of England wants to cut interest rates. We've talked about this story many times. Who's going to cut interest rates? Or back in 2022, when you and I were doing a lot of coverage on this, who's going to hike interest rates the fastest, right? The rate at which we're cutting or hiking rates is really going to be impactful for the currency traders in the room.
Yeah. But also remember yourself that we were expecting 4 cuts in April. In April, we're thinking we're 4 cuts in 2025. We're just down to 2 now.
Yep.
Maybe 2. So this is constant development. That's also why we have had some dollar bullishness, because we have to price out. And in as much as we can say that, we have Powell and they are supposed to do this because of this and this data, by the end of the day, it doesn't, and this is the Japan world as well, it doesn't really matter what we think, what the data shows us, because ultimately what this data is supposed to show us is what is ultimately the Fed going to do, because that is actually the money flow, more or less money supply to the market, and that's what decides what happens. So if we have 10% inflation, 10% GDP, but there's no change in interest rates, it doesn't matter. You're not going to get paid more to hold the dollar more than anything else.
Sure. Yeah, it's interesting too, because at the end of the day, like you said, the data, it ultimately is the data, but the question is, does it actually impact the decision makers to make a move on interest rates? But to the point about Bowman actually just said, I just read something. Essentially, they suggested that cutting interest rates in July is a possibility if inflation remains subdued. And so what we're seeing here is we're seeing a different posture coming out from some of the committee members. There's divide here on when rate cuts should happen. So it's very interesting. You're seeing at the end of the day, you might have Powell, who's a little bit more hawkish, and then you have Waller and Bowman, who are more dovish. And then, it really depends on how the narrative there continues to flow. What I would say is interesting, however, is that you have a division that is growing, right? So there was at one point consensus not to cut rates. Go ahead, Ivan. What were you going to say?
Your VTI price, is that? Mine is 73. Yours is 74.30.
Are you looking at WTI?
And looking at US oil.
Let's see, TVCs. This might be interesting.
It's different in providers.
It's I've got Owanda's here. Let me look at this. Is Brent WTI?
Yeah, Brent is UK oil.
72.68.
Sorry. I'm just making problems today.
It's okay. Yeah, regardless, oil prices are moving lower here this morning. Look at that drop here now.
Yeah.
This is Ivan, you've talked about this a lot. I've seen in the chat rooms that we have in our Discord. Yeah. You've talked a lot about this with geopolitical stuff. By the time the narrative kind of hits the news headline, I've seen you say this multiple times. You're like, you have to be really careful chasing the price of oil, because a lot of times by the time you've seen that news article, the edge is completely gone.
Yeah. So the shock is kind of like it's priced in at that micro millisecond, whatever we have when market opens. And that's the target. And it seems to be the target. And I can't explain the otherwise other than that's what I experience. But because if I experience every time there's a risk event, we just skyrocket and continue higher, that would be of course, we should be buying higher. But what generally happens this week, happened last week, happened all the other times we've had risk events in the Middle East or risk events in itself, is that it gaps higher and then the market continues to fall down, and then falling much lower than the initial one. It closes the gap and then continues lower. And I can't explain it other than the gap higher is to take profit, and those who are too eager to see, there is now a new world, it's going to be crazy, is the one that becomes the liquidity and becomes, I don't know what you can call it in English, but it becomes the sheep that is just following headlines on the news and not really trading, because the real trade in my eyes was 2 or 3 weeks ago, before this whole move started. Now is take profit time, and it's kind of the end of the move more than anything else.
I mean, I would tend to agree. I mean, that's the thing, is people just get so like hyped about something, but usually it's at the worst possible time. We see that over and over in like the stock market. We see it over and over in commodity prices. By the time the masses get a hold of something and freak out or make trades on something, it's usually the worst possible time, because again, like you said, the trade is to be involved in it early, before everybody's talking about it. And by the time everybody's talking about it, like, there was a whole bunch of traders who, they said, oh my gosh, we're going into World War III and all this stuff. And they bought oil prices like crazy. They bought a bunch of energy stocks. They bought a bunch of, stocks or oil or whatever, gold. They bought all these things just as the apex of the move may be forming. Really, it's like it's the old buy the rumor, sell the news concept. You want to be ahead of the big announcement. But certainly that's hard to do, right? It's easy to say that. It's easy to say, oh, you should have been in oil over here. But here's the thing. If you're not in oil from over here, right, my opinion would be you definitely shouldn't be trying to get into it over here, right? Like if you didn't catch it, fine. You missed it. That's fine. But if you didn't catch it, it would be silly to try and, in my opinion, now this might work out. Like if you took a trade right there and it might rip higher, I don't know. But over the longer term, I would say 9 times out of 10, people getting themselves into more trouble chasing sort of a scary or exciting headline than otherwise, right? Most of the time, it's pretty poor timing to chase the news cycle that everybody's talking about.
Yeah. And if you have followed me for even longer time, I normally talk about the number 1 and number 2 trade, which is the first pullback and the second pullback in a new trend. And this one is a bit difficult, but this is kind of the last, which, by the way, at that point, it is a high in a range more than anything else.
Mm-hmm.
But this is where the market later, this is how we can see later, would be the last point of entry. Because when you go here parabolic about Friday, 13th of June, remind yourself, or remind ourselves as well, is we are not higher than 13th of June. That is what, 9 days, 10 days now of this Israel-Iran war, and we are still almost at the same price. We haven't gone back down to the original start price, but we are not skyrocketing through the roof either. So that's where I would argue that's where your last chance is. And after that, do whatever you want. Market can go up and down, but after the third pullback, it's gone and dead. And now we are, I don't know, 5th, 6th, 7th pullback or something.
That's wise words, Ivan, because I think a lot of people, there's what you're talking about with like, okay, you want to be early to a move, and if you miss it, you miss it. I'm with you on that. But the other side of it too is the psychology part, and we don't have too much time to dive into it. It's a great topic, but we have to move on to our next guest. But I just wanted to add another thing too is by chasing, when you get those big headlines, you create a really bad habit that is super dangerous. You're giving into, oh my gosh, if I don't take this trade, I'm going to miss out. Like, you're giving into a really bad habit that can set you up for a lot of hurt in the future. So even if it works out this time or the next time, chasing is a dangerous game to play and can get you into a lot of trouble, because you're chasing, you're giving into your emotions. You're likely also to give into making bad risk management decisions, etc. That's all we got time for this time. We got Chris Pulver's show starting up next here. Before we move on to that, real quick, if you guys would like to hear more from Ivan, he has his own YouTube channel, and he also does one-on-one coaching. So if that's something that you're interested in finding out more information about, first of all, you can subscribe to his YouTube channel, Ivan FX. And of course, if you are interested in the coaching services that he offers, you can send him a direct message there, or you can find him on socials, or if you're in our Discord, you can send him a DM there. Ivan, thanks very much for coming on and talking markets with me.
Thank you very much for having me.
All right, see you next time. Up next, guys, we got Chris Pulver taking over the show here for a little bit. Before we run that back, remember, we're doing our Edge Finder free week. It is free to everyone until next Monday. If you'd like some information, we'll drop the link here in the chat right now to where you can apply to get access to the Edge Finder free event. That is available now until next Monday. We do these very infrequently, so if you're interested in trying it out for free, if you do not have it yet, it takes like 1 minute to get access to the Edge Finder for free. That link will be available until next Monday. So stay tuned. Chris Pulver is up just after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Good morning, traders. Happy Monday. Welcome back. I had a chart alarm go off on TLT. Bonds are getting a bit of a bid this morning, and we have currency strength chart. We have dollar that was on top. So we had Swiss dollar offering probably the most safe haven flows for the morning. Pretty much, interestingly enough, moving in tandem. And then the dollar has separated. The Swiss is still on top. Pound is getting a bit of a bid. CAD is back to middle. Lowest was yen and New Zealand and Aussie, which we've seen this pairs quite a bit. The Aussie and New Zealand both kind of representing risk on trading. So risk off flows coming into the U.S. session. Basically, U.S. attacked Iran. It was for nuclear facilities. I think they're still trying to look for some type of deal. Don't retaliate or we'll retaliate more. Markets were on edge over the weekend. I was curious what Sunday's open is going to look like. Futures market opened red. and then quickly faded. Here we are, green on the morning. So again, very noisy. This actually was a sell side trade that I took this morning. I've got my resistance at blue, and it's being threatened a little bit. I've got my support side in blue. I'd like to see price actually fade this rally a little bit. I'm still thinking that by the end of this week or going into the end of the month, which is next Monday, that we're still going to be able to tap this like 5905, 5900 support level. But if we don't, it's just more hedging that are pushing prices higher. So depends on the mix of like positive, negative gamma. But hopefully from the levels that I have here today, and this is what I was watching, is I really don't want to see prices intraday, move higher than the expected move. They have. It's like plus or minus today was like 28 points. It's already up almost 40 points, 45 points. So I'm hoping that like the 60-10 to 6,000 handle holds. Maybe even falling back below 6,000 would be kind of nice this morning. I like to see if pricing just kind of center out for the day. News-wise this week, here's some other thing I'm watching. I was kind of thinking this like sticky 6,000 handle would kind of hold as a ceiling. So far, it is like we're trading live at 6003, but I'd like to see price kind of fade back below that. Like I said, bond market gets a bid a little bit. I do have TLT exposure. I think I have part of my diagonal spread on TLT is out to the end of the month. So if I go TLT, 89 calls out to the 30th. So next Monday, if somehow this TLT is above 89, that is kind of perfect. I wouldn't mind it getting called away. I've got the 65 by 89, and that is $24 max credit. And I think I paid for this. Let me double check my tracker here. TLT. So I paid my debit's around $20.30. So if I go 65 plus 20.30, my break even's at 85. You get it called away 89. I make 370 per contract, and I have quite a few contracts here. So 4, 8, 12, 16, 18, 24, 8, 30. So times 30. So I'll make about 11 grand if it gets called away 89. So that's a pretty decent bid for TLT to keep surging this week. See if it does. I wouldn't complain. I mean, chart alarm set here 89. I don't think I'm going to roll it. I don't think I'm trying to hold and get a big squeeze on bonds. Good for bonds catching a bid. Dollar index. I mean, I guess was a little bit higher going into the morning, but it's faded. Let's see if this I feel like the dollar faded in the last like couple of hours. I mean, the dollar was on top at 5:30. Dollar's on top here at almost 8 o'clock in the morning Eastern time, and from 8 o'clock to now, faded hard. So you've got some risk appetite come back in the market. The dollar's fading. I still don't think this is the dollar that I sell. I still think this is probably a squeeze back up to 101, maybe 102. But I do think there are, medium to longer term sell the rally outlays on the dollar. I just think it's a crowded trade where everyone's trying to short the dollar, and I'm not positioned to do that. I'm looking at, a 101 to 102 fade the dollar, which tells me again maybe I get a repeat of the trade that I took earlier. My euro dollar that I was long when we had this trade right here, I bought it around 111, 111 like 80, and I took it up to the highs around 115. I think I might try to do the same thing. If we fade back down to the same levels, I might dollar cost average in like that, and then try to hit the highs again. It gets a little bit more challenging. Let's say that the highs are here, right? But then it still pulls back. Like I'd still be interested in either, short it with an asymmetry move where I can have more reward than risk that way, or I just simply wait and try to buy in lower, buy in lower, buy in lower, and then make sure the dollar's not coming back below this handle. So I'm not chasing the dollar. I think that right now the DXY tells me this is a bear trap if you're trying to short the dollar. If you're trying to short the dollar into these lows, to me, that's a bear trap. So I'm not saying we can't poke the lows. I just don't trust them when there's a lot of hidden bullish divergence on this chart on the higher time frames. Oil, big spike up, 77, not quite as high as we had last week, but again, a lot of volatility on oil. I do have a trade running on CL. I'm not sure what it's doing right now, but I have like a 1111 trade going. So right here, CL. It's up $20. Pays me $220. I think the probability remains pretty high. I've got about an 86% chance of profit on that trade. Just depends on how much of a deal that we strike with Iran. Whether we do or don't, does price just immediately collapse back down to $65? But I think if we remain elevated above 70, I think there's a lot of chop in here. If we stay above 70, that's probably a good sign. I mean, my futures trade is not out that far. I'm out. I guess I'm out further than I thought. I'm out to December, but I'm $50 is my strike. So I don't really have a ton of risk unless oil is going to be below $50, which at that point, I think a lot of companies would argue that it's kind of unprofitable to have oil at those levels. That would be fresh lows. So keep an eye on that one. Gold, again, remaining pretty well bid off the 21 period moving average for now. We're holding this 21 period moving average. Is gold capable of continuing to kind of work its way up into this high? I don't think that I want to be buying gold into the high just because I feel like we still have a range potential. I'm still, I mean, I sound like a broken record here, but for months now, I've just talked about I can't buy gold without having some type of better test of this 144, the 200 moving average levels. Like this to me is really, really strong support. So I'm still long gold. I'm still holding long gold. I'm just not adding to my positions. Now there's ways that I could. I put in a GLD trade. I did a 1-1-1 on GLD, which is actually I take that back. Did I do a 1-1-1? Let me check. So new account last week, GLD. I bought the 270, sold the 265. Oh, never mind. I just did naked puts. So I put on a 230 hedge. That's an out of the money hedge, but I put on a 270, 265 put. And that is up it's about $320 of income. Also it's a spot that I would say I want to own GLD. If I could own GLD spot price gold 270, 265. Let's go to that price here for GLD. Look at my moving averages. This is 271. So if I'm willing to say, hey broker, I'm willing to own this at 270, 265, that means that price would have to fall in order for me to get assigned. We'd have to fall about 13%. We'd actually fall further than 13%. So we'd have to have a pretty big correction on gold for me to get assigned. If we do have more of a dip, then I'll start dabbling with some gold futures trades. I can't justify buying gold at these levels without thinking something like this. Either one, we go sideways and these moving averages catch up and it's just support, like dynamic support in here, or we break through these highs and we have like a gold bubble that then this gold bubble in the near term ends up bursting and popping, and then it becomes a big shakeout, market kind of resettles and has to start over. I don't know. I mean, if it's a gold bubble, then as I've said this before, like as we're going higher, I'm moving stop losses and trailing stop losses because eventually that will crash and that will correct. And to that degree, probably like 20+% would be a correction. So I think it's easier for traders right now to think if gold just stays in a range, this is a large accumulation zone and gold maintains a bid. I think right now, as kind of as desired as gold is for a non-dollar trade, for a global hedge, for a store of value, I think it's probably consolidation. It would be more challenging to see, big move in gold. Everyone gets excited. The trade gets extremely crowded. And at some point that thing breaks. And I don't know what the catalyst is that would break it, but we saw that happen back in 2010, 2011. But consolidation's fine. Consolidation is fine if I get a chance to buy the dip, right? Buy the dip. I just don't want to buy as we're nearing highs with about 13%, what I think is a pretty solid technical correction and measurement. We're on a pretty high bar count. Will dollar stay strong? I mean, I said no. I mean, I think the dollar at best is going to be a squeeze. I think the dollar at best is, even if we go, I mean, here's a simple way to look at it. If we go this way, so if we have dollar weakness, let's right now from this recent high, which is that 102 handle, we've seen lower highs and lower lows. If we go one more push to the downside, take the low out, I feel like on the right side of this trend line, the dollar catches a bid and works its way back up into the range. So I think this is a bear trap. I think at these lows, this is a bear trap for the dollar. It's crowded. It's oversold. There's lots of divergence. And, again, it is surprising that this is what seems to be a risk-off environment, yet stocks are higher today. Oil's up. You're seeing the Aussie and New Zealand round out the lows and start to come back. The dollar and Swiss were safe haven. They're now fading. Like, it's funny how this market is like isn't pricing in anything. Like, there's no real shock and price action. We are still very, very calm at these tops. You know, I mean, for now, this is now like week 3 of a lot of indecision. And going into the end of the month, I mean, something wouldn't be terribly surprising to see like indecision candles for like these 2 or 3 weeks, and somehow going into the first part of July or getting into the July options expiration by the 18th, we're either back to the highs or we're having a more meaningful correction. So I'm looking at just a volatility play on maybe on SPY, maybe on QQQ, just to see if we can go somewhere. So let me I want to price something out right now. Like Qs and SPY, let's go out to the end. So Qs, I can only go out to the 25th. I think SPY can go out this GLD. Let me go to QQQ. So I can go to the end of the quarter. Let me go out to the end of the July. So I can go July 31st, August 1st. 31st is a what? 31st of July is a Thursday, maybe August 1st. Okay, let me move this chain up. So this is QQQ out to August 1st. We're trading around 529. I know highs on the Qs around 540. 541, that's 12 points higher. And let's say gap fill, that's 5. I mean, that's crazy. 27 points to the downside or about 12 points to the upside. I almost wonder if I can just put on a skewed trade. If I were to, let's flip this option chain around. If I were to buy, give me 1 second here. If I bought the, I think I looked at this last week. If I bought the 35, so bought the 35 and maybe sell the 45. So I pay, 487 to make 500. That's fair. I mean, this trade kind of covers itself. It's like this would have to happen sooner than later for this to be really good pay. We'd have to break all-time highs. I'm not saying that we can't, but this is one way to trade it. If I shorten this up a little bit, it's a little bit cheaper. Now I pay 260 to make 5, so it's almost a 1-to-1. It's not great. On the downside, however, I can make a lot more on the downside. If we get anywhere near this like 505 zone, so from 505 to like 485, let me take a look at that one. So if I priced in a 505 by 485, so on the downside, I have $20 of potential profit that only cost me maybe $3. And on the upside, I go 535 by 40. That's paying about 260 to make 5. So the skew, it's like there's a huge dead zone here, which is why I don't like this trade. Like, it's still a $500 risk, but on the upside, I mean, the dumb thing about this is on the upside, I can't even make enough to cover the size of the trade. So I have to go wider. I've got to go 5 there. So now I pay 750 to make 10. I still make hardly any money on the upside. I kind of hate that. I hate where we're at. It's kind of it. Like, I hate where we're at. So I can't even do a volatility play. Now I could make this a little bit simpler and, buy the 530, sell the 540, buy the 529. So for 880, I can make $10. You see how like stupid this is priced? That's insane. Like, I have to pay $8.80 to make $10. That's backwards. That's a horrible reward to risk profile. So it's like you're just not rewarded for any real directional movement outside of if the market falls, then you get rewarded really well. If the market rallies, you're paying so much for that upside premium. I hate the trade. I really hate the trade. So anyway, I think the best trade for me is just patiently waiting. I'm actually going to bring something up really quickly to show you. Let me go to. All right, so I'm going to show you a little back test on one of my favorite strategies that I do for the pulver alerts. It takes some capital to run this type of strategy, but it is one of my favorites. I could do this trade back for the last, I could go back a lot further than 2023. I'm going to go back to, the data here starts in the let's go 2013. January 2nd to present. This would be a SPY trade, and I'll just do a custom. So if I buy a put at a 25 delta, and then I can sell a 10 and sell a 5. Let's go out 60 days. Actually, we'll go 90. Okay, you're just going to see an equity curve that's pretty amazing. Max open trades will go 1, 1. The goal is, let's do this trade monthly. Profit target, I'm going to go after 85% of credit pulled in. With commissions. Okay, and also requiring 2 consecutive hits of the profit target to close. So it's not just some funny like, oh, it hit it once. Like this has to be like multiple hits of the profit target. So, all right, let me run this in the background. This might take a second. I'm just running this on my other screen here, but I'll show the results. So you should see a profit and loss curve that looks like this. Bottom left to top right, very little disruption on an underlying that you can own with a plan B to fix. So I do this a lot for my managed accounts. It does take some capital. There's obviously volatility in the trade, but let me see here. 25, 10, 5. Okay, let me see 1 second here. Starting funds. Okay, we'll try this. Okay. So I still think in the near term, you know, a pullback would be great. I mean, just looking at, I mean, I've got all these moving averages on here. This one is, what the heck, dude? Let me switch the date here, I guess. Like, okay. It should be a little bit easier. I'm giving it like some looser parameters. Like instead of going exactly 90 days, you know, if it's 89, 88, 92, just roughly around 90 days expiration. All right. I'm hoping that, let me check what this exponential moving average is. This is a 21 period. Let me check and see where these are at. This one is the 50 period. I'd love to see at least a pullback towards the 50. So a pullback to the 50, pullback to the 200. Whether you use simple or exponential moving averages, to me, a little correction into this area. And even if it's one of those like 1 day spikes to the downside, and I know those are super disruptive. I'm really surprised that that didn't happen, that we didn't have like, you know, the threat of war, the US attacks, and Monday's not just like a big face ripper to the downside or, you know, face melting bearish day, because like who knows, right? Escalated uncertainty. Are we gonna have a war now? Market's like, we're fine. You know, it's just like boring old 2-day or two week chop right now. Let's see here. What else? That is not right at all. So buy a put, sell a put, sell. There's no way. Hang on a second. Try something different. I'm trying to get the delta correct on that little back test. Let that run. Okay, so I'll point these out again. So the 50 period right here, the 200 period right here, you know, it is, as much as this is annoying and sideways, it might just find a way to keep going higher and higher and higher. I do think at these highs, if you go back and look at any major correction we've seen in the last 10 to 20 years. Any type of like 10% correction, price comes back to the highs and usually stalls or pulls back. Any type of correction, the market comes back up here, pauses, gets up there, maybe pauses at the top, then goes up, comes back down, then gets. It's like the market's gonna have to respond to this level in some way, shape, or form. Whether the market is going to stall at these highs first, like it is right now, whether or not this, I mean, I thought for this structure, this was a pretty clean rising wedge, and we're just not really making any convincing break to the downside. So this rising wedge is really noisy. If it keeps giving lower lows, then we're coming back in the correction I'm talking about here, the 50 period, 200 period, fill this US-China trade agreement gap. But in that area, that's where I want to go. Like I want to start positioning for better trades, more long, more allocation in that pullback zone. Because to me, I think the downside is a little bit more limited. I don't think we're coming back to this low. I think that the Trump administration pivoted pretty darn hard. The goal is now it's all about growth out of this. All right, here's finally the trade I was talking about. Okay, that's the P&L curve I'm talking about. This is one of my favorite trades to do for my managed accounts. Manageable drawdown, super high win percentage. Obviously, it's undefeated, but there's flexibility in the trade. That's also taking a cap profit target. I could also tighten this up. I mean, this is all based on deltas, expirations. It does take some capital. I mean, you're pulling in every 90 days about $400 to $500. This is on the SPY. I mean, I've seen this trade executed on the ES, and you can make a lot more money on the ES, but you take on also a crap ton of unlimited risk, and that's not what I like. I mean, at least for the SPY, I have the cash to say, well, if I own the SPY, get assigned the SPY, I can repair the SPY. ES, you can't. You're going to have to use the stop loss of, hey, I'm down, 203% of my net premium. I should get out of the trade before it gets exponentially worse. I saw some great traders last year during the July to August dip, especially that like August weekend going into the 5th. If anybody remembers August 5th, that was the Japanese yen deleveraging. Crazy stuff happened over the weekend. The market was down 3-4% overnight, and the futures market exploded. And that volatility went from like a 20 to 40 or 20 to 45. And I saw traders that do this style of strategy with this beautiful equity curve that all of a sudden literally gave back, months and months, if not years of profit. Just because futures market has that leverage and things get priced in so aggressively, it was, triggering stop losses at 3, 4, 5, 6, 10 times your stop loss. So I was fortunate that I had limit stop losses, and the funny part is I know that I'd rather trade the SPY. I think there's the famous saying is, the trader that dies with the most SPY wins, the trader that dies with the most NASDAQ, in my opinion. So SPYs and Qs, if you have more SPYs and more Qs, you're probably going to be pretty profitable. It's just a matter of managing risk. So anyway, I do this trade a lot. So this type of trade is what I want to do if we see a pullback. If we see a pullback, we see a little spike in VIX, that's good. I want to sell some premium. I want to put my levels down here. I do have a couple of those already organized right now, and I put them down to this, the SPY at 510, and the Qs, I think it was around the 420 handle, 425. So between the 500 or 510 SPY, 425 Qs, I mean, I have that trade in right now. Obviously, if price goes higher, that becomes easily profitable. If price comes lower, I'm going to take on a little bit of heat, but I'm going to start adding more trades in and just lower the strikes. I mean, if I could own Qs at $400, I would happily own Qs at $400. If I could own the SPY at $500 or $490, I would happily own the SPY at $500 or $490. I think we'd all agree. Okay. And it doesn't mean that we can't go lower. It just means that with a couple covered calls, with some downside protection, with some managed risk, I think that it's a great starting point. If I'm going to own shares, it's a great starting point, right? Okay. So let's see what we get. I'm checking a couple other things here. Trades on the day for me. So down and down. This hedge is up a tiny bit, not much. I need prices to stay below 60.10 and 60.15 today. Right now we're trading at 5.999. So a little bit of threat to my call side. I'd like to see if price can come back into this area. Let me move this chart along. So we're at 59.97. Let's see if we can go to like, 85 or so and see what that looks like on my break even. That might be a break even or better. Maybe come back halfway. Okay, let's talk other stuff. We did dollar, we did gold. Let's do silver. Okay, so like I said, gold is staying bid off this 21. I'm not sure how crazy scalpers are out there, but if you're buying that 21 period, tight stop loss. I know that last week's trade battle, that was a huge lot size for Blake, and that hit really well. That ended up, that and like a 10 lot trade on the euro dollar, one of the trading battle. But that was super precise based on an intraday swing. That was this low high 618 pullback, caught a nice bid on Thursday, and still, I mean, in the bigger picture, it's not much, but when it comes down to like that precision, that little pop, that respect of the fib zone plus the 21-day moving average, I think you got a little bit of a jump there. But I think it's more, are we going to see slightly higher levels? Are we going to retest the highs and fail at the highs? I still think this correction and pullback is needing to happen on gold. Silver. Actually, you know what? Silver futures, I might look at this one right now. Silver futures. It's all about the reward to risk setup here. But I think silver is a pretty good bid. I'm going to see if we can hold above like 31.80. I think it'd be tough to get like a 27.50 here in silver futures, but I'm going to look at it. So silver futures. Could I do a 27.60? I mean, I might be able to, just depends on how far out I can go. I can go out to end of the year on silver. 27. This would be just kind of strictly an income trade, 27.50. So if I, let's see, if I buy, sell. So I can make some income there. Buying power is not awful. I would want to, I want to make a spread so I at least have some credit here. That makes me about 40 bucks. That's nothing. Makes me about 80 bucks. That's nothing. So I'm just trying to keep my buying power pretty tight. 100 bucks here. That's not awful. So I'm taking up like max loss. Buy power is not bad though. This would be 150 bucks. Like probability of profit in this trade is pretty darn high. Like 94%. I don't think silver is going to collapse necessarily. Could I maybe give myself a slightly bigger profit? So I could give myself a bigger profit trap. Let's make an 80. How wide is that? So 27 by 25. Make about 140 bucks. So buy power is 808. So make 140 out of 808. I mean, this is 17% return on buy power. Probability of profit's pretty high, 95%. There's not really a plan B because it's a futures trade. I can't own the underlying, but I own SLV, and SLV just doesn't offer the same premium. This is more of like use the structure. I think silver is a great bullish trade. So the trade that I'm talking about is if I put on the silver trade, we have to stay above this level. Like I get paid if price goes higher in silver, I get paid. So if I do this for, every account here, there's roughly 15 accounts. So if every trade offered up about 140 bucks a profit, so 140, so make $2,000 on a pretty high probability trade. It's okay. Like it moves the needle just a little bit. Add it to the bottom line. It's just a trade. Buy power wise, it doesn't take up a ton. So 800 bucks. So 802. I mean, I'm tying up 12 grand to make $2,000. Yeah, about a 17.5% return on buy power. That's okay. I think I'm going to take the income trade. So let me see if this will price out. If I did it, it should be cheaper this way. Now it's over 200 bucks. I like this one a little bit better. So that cuts my max profit down a little bit. So there's max loss versus max loss. But as far as the incoming credit, now I'm making, instead of 140 bucks, I'm making $200. So I'm making about $3,000 in the same buying power. So $3,000 out of 12. I'm making about 25% return on buy power versus 17. Okay, I'm going to take this trade. So this one, Hopefully I get filled at 44 cents. I'd like to get filled a little bit better than that. So let me try 45. Okay. Pending order on SI. Let's go. I'm looking for just up here, like where to go. All symbols. It's right there. Is it not in that account? What in the heck? Okay, so it is right there. I'm trying to find it here. It should pop up in my pending orders for this account. There it is. See that right there? That's so weird. All right, anyway, 0.045 not filling. So let me replace this to 0.044. 0.043. You dirty dog. 042. Now it takes it down to 190. Come on. Go clear. I'm going to cancel this trade. So that started out at a 27.50. So 27.50 by 25. I'm going to go one wider, one wider. $48. Now it's $220. Like, why can't I get filled there? All right, I'm going to try this one more time. 0.048 is the mid. 0.48 mid. 47 puts me at 220. Gotta be kidding me, silver. All right, I'm going to come back to that trade. That's stupid that it's taken that long and not getting filled. So I'll put a pin in that one. I do like it. I think it's just a little bit less liquid. You look at the open interest. It's very quiet just because it's so far out of the money versus what we have kind of around current prices. So anyway, I'll come back to that one. I do like the trade. I'm just trying to get a silver trade in income wise out of the way. I think silver is looking good. If we have any dips or pullbacks in SLV, I'm still targeting SLV at 44. And if you go back to the daily chart, weekly chart, I'm targeting all-time highs. So SLV all-time highs at 48. Yeah, I'd love to hold my SLV shares up to $48. I think that's an awesome profit target. All right, let's move on. Bitcoin, we just dipped below 100K over the weekend. So here's the daily. Here was yesterday's price. So yesterday, Bitcoin took a low of 98,240. Just rolling over a little bit. I still think this is a pretty good accumulation spot for Bitcoin. So, slightly lower highs and lower lows. Maybe it starts to roll over a little bit more aggressively, but trend line break area, keep an eye on it. I still think this needs to pull back into some pockets and inefficiencies. Maybe we have more of a full on, accumulation at 75K. To me, that's like a no-brainer buy. Even if it's just a range trade, you buy here, you look at taking a partial profit around the highs at 110, 112. Like, that's a great trade. Obviously, if you're more longer term, you want to see all-time highs again. But anyway, we'll see. Just stay patient. Pullbacks on IBIT, yes, you might be getting filled here around like the 55 handle. MicroStrategy trading at 364. Let's see what happens here. Coinbase, after being announced that the stablecoin bills passed, then that was a big jump in Circle. That was a big jump in Coinbase. That was a big jump for a lot of things kind of crypto related. That was a huge hit. That was when MasterCard, Visa, PayPal, some of those other finance and payment companies were just taking a huge hit. Coinbase is up. Ethereum pulling back. I'm glad I didn't kind of get suckered into that bull flag, but I'm telling you, like, this might be just a really good textbook structure trade. You kind of buy for the swing and look to see if this thing heads up. I mean, you can see the asymmetry right here. If I were to buy, I mean, now is a 382. I mean, even a 5.0 with 618 pullback, and you take profit up here. So your stop loss would be below the swing compared to your reward. I mean, that's roughly 2-to-1. Like, that's a good looking trade. Not guaranteed. There's still going to be risk, but that's a pretty good looking trade. Copper, I have an expiration, I think on the 25th on Wednesday. I might end up losing $90 on that if we're not down into this green area, which is fine. JPY, this is Japanese yen futures down. See how this one stays bid. This is still, to me, the big inverse of the dollar yen. If we end up breaking this ceiling or breaking the floor at 140 on the dollar yen, that's a huge potential move. The Nikkei still trying to carve out slightly higher highs. My EWJ has rejected these highs. It's not great. I want to see if we can somehow breach these highs, but we're down about 5 1/3%. So I'm still hanging on to FX or EWJ. The DAX, watching for more respective pullback levels. The FTSE, same thing here, more pullback levels. Argentina, maybe the 200 moving average. China, hanging in there. I'd like to see a little bit deeper. I mean, we've seen really good support around all these moving averages. So even buying like the 144 to 200, if China is going to continue to kind of channel this way, deeper pullbacks have been proven to be a lot more profitable. EWZ, hanging above the 200 moving average on Brazil, looking to see if we break the highs. Latin America, same thing. Can we break the highs? MAGs, not really moving. It's just sideways stuck, a lot like the S&P and the NASDAQ, where sideways we're stuck. Next move in MAGs, I don't know. I mean, I think this whole thing for AI is still going to benefit MAGs. I think the one laggards might be Apple. I think Google, Apple might be the only MAG 7s that are left behind, more so than the others. I think that your Teslas, your Microsofts, your Amazons, even Broadcom, which isn't a MAG 7, but it's over $1 trillion now. It's like those are all in the AI space, like very aggressively. Meta's in the AI space. I think, Google and Apple might be the ones that are left behind a little bit. So if you're trading MAGs, I mean, individually, I almost wouldn't put too much emphasis on Apple and Google. I wouldn't count them out, but I just think there's going to be better gains ahead with other companies that are just more vocal about what they're doing with AI. So not to say that Apple's not still a strong company with a ton of cash. Amazon, I still like longer term, holding this thing up to highs and beyond. Broadcom, after a bit of a pullback, I mean, I'd love to see a pullback here. Can Broadcom go high, low, lower, high, lower, low? Maybe set up for some type of decent dip, take the low, take the high, look at some fib levels, and maybe accumulate in here to get back to highs. Wouldn't be a bad trade. Google, again, not responding super well. We're quite a ways away from the highs. I mean, Google could still maintain a pretty good bid at 150, but I'm not trying to hold on this one forever when I think the other Mag 7s are better. Meta, I mean, a pullback into this like 620 to 600 zone, I wouldn't necessarily want to just jump in and buy Meta, but dollar cost averaging here would be fine. Dollar cost averaging in here would be fine. If we get to this level, I might end up doing some ratio spread or some 1-1-1s down here. I don't think those are going to get assigned. I think that's more of a income trade, but I'll keep an eye on it. Microsoft, I mean, my dollar allocation worked out pretty nicely. I was buying in here. I was buying in here, and we've had a run to all-time highs. So any dips and pullbacks, I still think Microsoft, has good upside potential. Netflix nearing highs, Nvidia nearing highs, Tesla. We had a big announcement over the weekend that I believe there was some automated robo-taxis going in Austin, Texas. Apparently that caught a bid here. So robo-taxi service in Austin using 10 to 20 self-driving Model Y vehicles. Shares rose 1.4%. So I mean, big run on Tesla just on good news. Like, it's more than a car company. I know that all of the kind of believer Tesla investors have said that, and we're just kind of getting some more evidence of it now. It's still volatile, but that's kind of encouraging. Berkshire back to the 200 moving average. Like I said, bond market today catching a little bit of a bid. 89 is my level for my diagonal spread. I'm looking to see if we catch a bid on bonds. If we do this week, that's fine. I've got my expiration on the sell side at the 30th, which is Monday. 10-year yield down to some recent lows. That little bump up in TLT. 10 years pushing down 4.32. It's still nowhere near Liberation Day announcement, so we still have a long ways to go. But it's still an encouraging, decline in yields as we see bonds going higher. 20-year hasn't quite taken out this recent low, but 10 years has. So, yeah, I mean, it's something to keep an eye on. I mean, this is one thing I'm watching. If the 10-year yield, gets back to Liberation Day levels or lower, then anybody interested in the, housing market are rates improving, maybe just house prices come down. Okay, average mortgage price 6.8. Futures market, we talk about precious metals. Like if you're trading platinum's been running like crazy. Uranium, let me take a peek at uranium here. Okay, I do have some shares of this URA. I might end up taking the profit here. I could let it run. I mean, this Oklo stuff running has been pretty crazy. Where's my URA here? So it's up about 12 grand. It's not bad just to take some profit. I'm not saying that we can't go higher. I actually do have a measured move on this one towards the 40s. So I'm going to see if we can just hit. I mean, this is just pretty technical. There's a swing. There's a symmetry. Make sense? So I don't want to be super greedy, but having this swing, having all this chop and all this correction. Okay. I'm hoping that this is a symmetry move. So low to high, higher low to higher high. So if this chart alarm hits at 40 to 42, I'm not saying that we can't go higher because we probably can, but to me that's like a good enough. That's a nice swing. I've been holding this for a while. I mean, the shares that I held through this breakout here and all this support that I really thought once we broke, we were off and running to $40. It just took longer. But if we run up to these levels and hit it, it might just be put in a trailing stop loss and see if I get the benefit of some momentum. But so far so good. I mean, I don't feel like a fool that I have not participated in the kind of uranium pop that the market's given us. So anyway, I'll keep an eye on that one. Chart alarms are set, so I'll watch URA. What else? Some other stocks, Alibaba, anything here? This is just a little China exposure. Baidu still can't get off its butt off these $80 lows. KWeb, JD, I still need to sell. I think I've got a covered call on JD. Let me double check that one here. JD. So I've got a 36 at July 3rd. So a couple weeks out, but just continue to lower the cost basis there. Schwab dividend, Schwab growth, fine. Bouncing back, finding some inefficiencies. Growth has been doing way better. Russell growth has been doing way better. Advanced decline lines, are we above the 50-day? Shows here 64% of S&P stocks above the 50-day. Shows here about 45% of stocks above the 200-day. So a lot of stocks are still kind of stuck between, can we break above that 200-day? Can we not? Right now, the 200-day on a majority of stocks are still holding at somewhat resistance. We have 68% of NASDAQ above the 50-day, and we have 58.41% of NASDAQ above the 200-day. So tech is mostly in a broader market, kind of bull market. I think there's still dips and pullbacks that are likely. This to me, between these four charts, do represent really good timing for market breadth. So if you look at this, I mean, the symbol is S5FI. That's for the 50-day S&P. S5TH. S5TH is the 200-day. NDFI and NDTH. The only reason I use these is because if you go back to a daily or weekly chart, these can offer up some good opportunities to buy dips and sell overbought conditions, or at least start protecting some profit. Okay, so I do spot check those quite a bit. Individual stocks, MasterCard got beat up pretty badly last week with the stablecoin announcement. It's still down pretty hard. Visa, kind of the same thing. Now, I mean, with this being down enough, it's like, is it a good stock for me to say, well, it got beat up badly. We're having this huge pullback off the highs. I mean, it's down 11%. Now, could I put in a trade on Visa that's like, I mean, I don't know. Why would Visa not adopt more in crypto? I'm just they've got to be close to doing something like that to kind of get into the good graces of like where this stablecoin stuff is going. But maybe not. Maybe I'm wrong. So I just don't want to see a stock that's, you know, $300. Like MasterCard's $500. I'm not interested in owning 100 shares of that. That's way too much. I'd rather own the S&P for crying out loud. You know, Visa $340. Amex is actually a little bit better. I don't know how Amex has been more resilient, how this wasn't affected by the stablecoin announcement. I don't really know. These trades are done and over with and profitable, so that one's fine. Johnson & Johnson, I've got a 140 and 135 naked put on that one. PGR, I put in some ratio spreads here, looking to stay above the 195 handle. CB, another insurance play. It's a bit pricier than PGR. I just stayed in PGR at the 200 movie day. Palantir, kind of eking out some highs, got some ratio spreads. HIMS, red. I'm not sure what happened HIMS wise with news, but that's a big one. 26% after Novo Nordisk ended their partnership with weight loss. Oh wow! So wow, that's big news. It's like HIMS and hers. So this was kind of like telehealth, where you can call in. There's stuff for hair loss. There's stuff for weight loss. There's stuff for whatever. Personal needs. But I bought HIMS at like literally SPAC, like single digits, and this stock became just a monster. That's crazy. That is kind of big news. Now I don't know if that does like permanent damage or there's enough other brands that maybe it's not all Novo Nordisk, but that's a big drop. I do have some exposure here. I do have some ratio spreads. Let me show you here. I think they're just ratio spreads out to the end of the year. HIMS, yeah, I mean it's down today because of that big drop. But 27 by 26, 26 by 25, 27 by 26. I mean it should be fine. I mean based on the option chain go out to January. January option chain. I mean those are still. Look at how crazy this move is now. Like even the expected move is like, well, we could go to a 7 delta. That's still expected move. That is kind of crazy. But my risk would be here around the $26 handle. That's currently a 13 delta. There's still about shows here out of the money percent. Like this whole thing just got blown up because of today's pricing. But realistically, if this option chain settles, then this still has about an 80+% chance of profit that I'm not assigned below $26. So I'll keep a close eye on this one. Here's $30. 26 is like owning this thing at the April lows. I'm hoping the stock is, not all like, wow, because it did weight loss, it's this, bullish. And now that they don't, they're not. I think there's more to it than that. It's at least a household name at this point. Carvana, pretty volatile. Salesforce, O'Reilly, Redfin, Zillow. I think Redfin, Zillow, maybe some love later this year, maybe Rocket Mortgage later this year. I think we need to get some more clarity out of the rates. I think as long as housing mortgages rates go down, then those stocks possibly benefit. Uber, I would say pretty resilient. I'm surprised that Uber, Lyft aren't dropping a little bit more aggressively, considering you got Waymo, you got robo taxis now, like that are in the mix. Maybe they start to buy the fleets. I mean, honestly, why not? Why wouldn't they? Buy some automated taxis, put them in the fleet. It's still Uber, but now it's an automated Uber. I'm sure that could be a thing. Sector-wise, currency-wise, let's just do a quick recap here. I've got to bounce here in just a couple minutes. All right, come on. Let me set a chart alarm right here at this low. See if we can revisit that. I feel like I missed my daily profit play a little bit. So SPX on the day. So I'm still down a couple $100 on selling SPX this morning. It's still safe. I mean, 60, 10, 60, 15, still my levels. I just hate when we get a big sharp directional move. I'm still up a little bit on my hedge, but not much. So I just want price to stay below 6005. I'd like to see price, maybe tap the highs, come down, lower high, maybe a lower low. See if this can hit my 59.88 chart alarm. I'll set this at 85. 59.85, just a little bit lower. And then I might as well set a chart alarm here at 60.10. So chart alarm at 60.10. there. So whether we, threaten my call side or we stay sideways, these are some of the ceiling levels I was watching today. Came right up into resistance. Hopefully it's just going to reject and hold, get back to center around 59.80. Sectors, currencies, any currencies you want to take a look at. Here's currency strength. Again, Swiss staying bid, dollar, taking a nosedive back to baseline. CAD's with it, Euro's with it, pound is up a little bit. Aussie, New Zealand yen starting to come off the lows, but still, I don't know, I'd say reasonable volatility today, 70 and 80 on the vertical axis. We get some separation there. That shows a, Aussie dollar pullback, a New Zealand dollar pullback. Those are pretty decent. So that's not a bad pullback. This kind of long, I was really hesitant, especially in a currency market. Like I'm hesitant to buy structure like that. So we'll pull back into these same lows or pull back into, here's a swing low, swing high, just plot a fib. Honestly, plot a fib, take your low, take your high, and it's been drifting higher. So maybe this is the better swing. That's the better swing. Now look at your 38, 50, 618 pullback zones. And do we hit 38? Do we hit 50? Do we hit 61%? I would buy in there. You could buy small, buy small, buy small, buy small, stop loss below. There's your risk. And then your reward would be 1-to-1 or better. If you want to get to a full extension move, that's going to be roughly a 2-to-1. Just exceeding a 1-to-1 is right here. So this is greater than 1-to-1. It should be about a 2-to-1 or better. 2-to-1 plus. But you're still waiting to see, like, do we get more pullbacks? That would be that correction and squeeze on the dollar that I was talking about. Make sense? All right. Euro Aussie. I missed the move. This trade originally, so the Euro Aussie was, I wanted this trade. High, low, lower, high, lower, low. That's the trade that I wanted. So now that this is on the upswing, I don't know if this is going to stop. If we have risk off flows, like this probably goes back to the highs. I don't want to fight that. So for me, I don't like a trade. I wanted a pullback here to sell. I didn't get it. And I wanted a, dynamic support to buy. I didn't get it. So it's just been slippery. I don't like a trade. Euro CAD, maybe rejection at the highs. That's about it. I'm surprised that Euro CAD's not doing better with oil being up. Euro Swiss, kind of messy, but still hopefully break above the 200 moving average and head higher. Euro pound, lots of back and forth. There's just a lot of back and forth in that one. Euro yen, good Lord. Wow. I saw Swiss yen hit some highs. Look at that thing. This is why I said don't sell the Swiss yen. If anything, this has to prove now that it's got to break the trend line. I don't know if that's the case. We're at 0% interest rate. This is actually a positive swap. If you're short Swiss yen, it's a positive swap, but this trade is not even close to confirming. So maybe on the right-hand side of the trend line, you can sell the top, but it would definitely come with a stop loss if you ask me. Euro New Zealand, very similar to Euro Aussie. We did actually have better support in here to buy. I was looking for the the 200 to 144. I was looking for this low. I was looking for this inefficiency. That's where I want to buy the Euro New Zealand. I didn't get it. Initially, the trade was high, low, looking for a lower high to lower low. I didn't get that sell trade. Again, just it slipped between my highs and lows that I wanted to trade at. Euro dollar, I'm going to wait for some pullbacks. Pound Aussie, if you bought some equal support, that's it. Pound CAD, no trade. Pound Swiss, I still like long in this one to the 1350 zone. Pound yen for scalpers, just continues to grind higher. Pound New Zealand, you had equal lows at 2.22. Not a bad spot to buy low. Pound dollar still hasn't broken the stupid trend line. This trend line's been around since January of 2020, or I'm sorry, January of this year, and we still haven't broken it. Zealand CAD, a decent pullback. I'm getting closer and closer to my 50618 pullback zones. So looking for an entry in here and in here to buy. This area, I want to take this trade to the north. New Zealand Swiss, pulling back still. Maybe it's a double bottom. Still a pretty decent bar count on the 200. Just watching the structure. New Zealand yen, no trade. New Zealand dollar, good pullback. Dollar CAD. If we're not breaking this trend line, I'm not doing anything with dollar CAD. If we get down to like 134, 133, 132, then maybe a buy trade here. If you're looking to sell it, you're selling maybe a stop loss above this high. But that's not a bad spot. It's not a great trade, but you'd want to see this go lower. I'd be careful on that. I think there's really strong support here at 132 to buy versus trying to look. If you want to sell the dollar CAD, then you should have sold it up here. This is not where I'm interested chasing below the halfway point trying to sell this thing. You know, obviously a much better sell trade. To me, this is a much better buy trade in the middle. Let it be noisy. Dollar Swiss, waiting for a trend line to break, see if it happens. Dollar yen, big volatility on the dollar yen, up, back down. Until this trend line breaks, you know, maybe this 140 handle, this floor isn't going to break anytime soon. Just watch. I mean, this could spend months and months and months consolidating again and again and again. Eventually, when it breaks and goes down, it'll move really aggressively. Maybe we try to time that. Otherwise, don't waste any sleep on it. I think that's going to do it for today. So, all right, I'll let you go from there for today. We'll come back and do this again tomorrow. This week, you know, we have core PCE. We do have Powell with the 2-day testimony. We are coming into the end of the month, end of the quarter. So that's going to be maybe spurring up a little bit of drama and volatility. Keep an eye on some things. I keep talking about 5,900. Right now, this market just kind of seems to be like sandwiched between can't really break above 6,000 or can't really break above 60.50, but we can't really get back down below 5,900 either. So, I mean, I do think at this juncture, something this week is going to have to shake this market up. If it just stays in no man's land, then the next couple of weeks going into July, I would imagine there's got to be some type of breakout coming. I mean, this is a lot of indecision for 2 weeks of trading. If we have another indecision week, I'd like there to be some type of breakout that we can take advantage of. There's got to be some type of volatility move. So, all right, I'll let you go for today. I'll see you tomorrow. All right, thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.